Hello, everyone. Paul Long. We're going over the series, How to Buy a Business Using an SBA Loan. And in this video, we're going to talk about the Guarantor personal financial strength. So what that means is, what as a lender, what are we looking for in a guarantor who's going to guarantee our SBA loan? So first and foremost, credit score. A 500 credit score isn't going to cut it. As in previous videos I've mentioned, 680 is kind of the minimum. It could go a little bit lower. It depends if you have a good story, if there's a reasoning behind that. But for the most part, we're looking for about a 680 credit score. We're going to want to know, where is your down payment coming from? Do you have that cash sitting in your checking account ready to purchase this business? That is going to go a very long way. If you have a little bit of cash and you maybe have some home equity and you have to borrow your down payment in order to do that, that's not as great as if there was cash in the bank. What's really important for you to know is, if you are going to be purchasing a business, you need to make sure you do that home equity before you start ready to go shopping. And that money is sitting in your checking account ready. Lenders do not necessarily like the factor that you have to borrow your down payment from personal sources. Again, cash is a good option. It's always the best, of course. Maybe a gift. Maybe you have a rich uncle, grandmother, something like that. I don't, but maybe some people do. I've seen it happen. That is something where they can sign a gift letter and be able to gift the down payment. That is absolutely fine. We talked about loaning on a down payment is not the most favorable. Same with home equity. Maybe you have to refinance your house in order to pull the cash out. Same type of thing. Maybe the sale of a property. Maybe you are you have a house that's on the market. You're ready to, ready to sell it. You're just waiting for an offer and closing. It's kind of hard for us to start the process without seeing that down payment. So the big main thing on this one is make sure that you have the down payment ready before you come to the institution in order to buy the business. We also want to know what your liquidity is going to be after the down payment. If you have $100,000 in your checking account for the down payment of your business, and you need $100,000 for that down, that's a problem, because we understand that you still need to live. So we need to understand, what is your liquidity, your cash position after you make the down payment. Another thing we look at that is really important is secondary income. A lot of institutions want to see what kind of secondary income's out there. So let's say, for example, it's a husband and wife, a spouse situation where they're going to buy a business together. The wife is going to run the business and the husband works for XYZ company. Okay, those are great, because obviously the husband's income can support the loan in a secondary situation in case there was any sort of downfalls. So secondary income is a really nice thing to have. Or maybe you're going to be buying a business, yet you're going to keep your current job until you're able to get paid more from that business that you're acquiring. That's also another one. The biggest thing that lenders want to know is, what happens if business starts to go south? Are you going to come back to us with your hand out asking for more money? Or do you have your own personal liquidity or other ways to have cash to put into the business? Hopefully that helps you understand this part of what we're looking for a guarantor. You can definitely check out the other videos at paultlong.com and this small business buying a business acquisition series. Thanks so much, and see you on the next video.